Thank you, stageanalysis.net. All right, another one straight from the US stock screeners from stageanalysis.net. APVO, guys, from the NASDAQ. Aptevo Therapeutics, Inc. And this little beauty is sweet. All right, check it out. Let's check out our monthly defined support, monthly defined. Well, there was monthly defined resistance right here at the 246 level. We had a breakout. Price target reached. Sideways move. Oh, defining some more. Stage 2, some more. There's some resistance right there. Ooh la la. Could even make a case that we had a breakout right here. Right here. Yeah. So let's move it up. Remember, closer, smaller patterns to the breakout area have a higher probability of reaching their targets than further away, bigger patterns. They might reach their targets, but usually they reach their targets via the building blocks of launching patterns and then them reaching their target and then another consolidation pattern eventually, etc. So if you have a big pattern, which let's say I identified right here, add the arrow, and I call that the greedy target. It's a valid target, but it's the greed target. It's further away. You have more chances of landing on emotional landmines. That is, the longer you're in a trade, you might succumb to reading news. You might start panicking when there's a pullback. Remember, these are monthly candles, so it's a long time for you to reach your target, maybe. And that target, before it's reached, that big pattern has to go through that target of the smaller launching pattern right here. And after that, we'll see what happens. So right now, this target was reached. Now we have some sideways move. Big dip here. We're probably going to see all that noise on the weekly. See what happened here. Was it high volume candles? Was it low? But this most likely, when we're going to look on the weekly, we're probably in the stage 2 already. But it had a really nice base that spanned about a year. And after that, another 4 or 5 months of launching pattern. Very, very constructive. Very stage 2-esque. When we go zoom on the weekly and try to apply Stan Weinstein's stage analysis. And here's my furthest away target. You could probably see that as potential resistance eventually. So I'll leave that alert, and we'll spot it on the weekly. Zoom in. Oh, magic. Wow. Okay, what do we have here? Okay, here's my crazy target. Remove that. Okay, I'll remove all trend lines. Remove all trend lines. Okay. Oh, look at these big volume candles, guys. That's what I always look for. So this candle here, let's take it back a notch. Let's say I was in the stock, not in the stock, but watching it. Right here. And then I see, whoa, look at the crazy volume candle. Then I'd look, am I breaking above a horizontal breakout line? No, not quite. Not this one anyways. Not this important one at 230. But this is a very, very strong building block. Remember, Stan's looking for that triple confirmation. Double the volume of the previous 4 or 5 weeks. Break above a horizontal breakout line. Break above the 30-week moving average starting to go upwards. And it was a Mansfield indicator. That's the relative performance of the stock versus its index it's in. I don't have that. I just have a good old simple RSI. So I have the 2.5 confirmation, not the full stand one. And then time moves on. Remember, the first breakout's probably not the one you're going to play. That's going to create momentum, pull back, let the market wiggle out whatever resistance it has on the way. And you're probably going to enter on the second or third breakouts. That burst, which starts, instead of having a declining 30-week moving average, it starts the first burst, probably going to even it, slightly lift it. Second burst, we get a better angle for the 30-week moving average. And then the third, you've got the trend with you. But what's healthy, pull back on contracting volume. Look at that, almost nothing here. And then, bam, explosion. And look at that. I like that. So right here, this is the breakout line right here. And then bam, this candle, even higher. Yeah, this is even more powerful. Breakout, but remember, this is Ichimoku cloud. Ichimoku cloud defined resistance, the red area. This is a nice add-on recommendation I got from Isa Trader on stageanalysis.net. And I like to wait. It kind of keeps me in check. Let's say I want to play it right now. You're running into overhead resistance right here. So that's like maybe these wicks, price action gets sucked back down. A lot of resistance here. And I just like to play once I'm out. So it kind of coincides with the first breakout, second breakout. Usually you'll be in the cloud. And eventually maybe by a second or third, you're out of the cloud. So it just kind of keeps you in check. Make sure you don't jump the gun. Always try to find an excuse not to enter a trade. And when you have no more excuses, then, you're in, guys. So what happened after that? Contracting volume on pullback or sideways move. But no. See, that's twice the average volume of the previous 4 weeks. This candle kind of skews it, but there's a lot of volume. So you had some more right here. Could even say that's the continuation breakout. Explosion. Take that candle, see right here, this one, explosion. Contracting volume, sideways move or pullbacks, very low volume. This one had some nice red candle. Now what you want to see, so instead of bouncing back up, that's sometimes a sign that the price action needs some more time to wiggle out whatever it has to iron out, whatever news the market has to digest. So you're still in it for a while until more consolidation work. Look at this. This is twice the average volume of the previous 4 weeks. And you're giving another go, guys. And you're out of the cloud now. So all that resistance, see? Whoa, you couldn't even go out. It brought it back down. Bam, right there. It got sucked back in within the Ichimoku cloud resistance. But once you're out, 30-week moving average is going more and more up. And now these breakouts, these bursts have more chances of not getting sucked back for those of that long of a period. And see, pull back, contracting volume, the rest candle. Bam, another burst. Look at that. Twice the average volume of the previous 4 weeks. And another burst right here. So another continuation breakout. These things just keep adding on, guys. Pull back. Burst, pull back on contracting volume. Now you could probably start entering. You put an alert just above the breakout line. If ever then you wait 1 week, 2 weeks, 3 weeks, 4 weeks. Wait for the price action to go back down in, and you notice if the volume has been low, contracting, then you know that this is a good area to start thinking of entering. You could wait for a green candle just to confirm that was the low, right? Red. It's never the low until you have a green candle. Once you have a green candle, okay, that was the low. So you could wait for that confirmation. So now you're really starting to believe in that stage 2, guys. You've had multiple breakouts. The original ones needing more time to iron out. You work through some resistance, but these ones, 4 or 5 weeks apart, burst, pull back, burst, pull back, 5 weeks apart. And let's see where we are today. Oh, okay, that's where we are today. Cool. So after this burst, what happened now? Pull back and contracting volume, and now it's trying to explode out again. And if you didn't buy here on the pullback, what now you could wait is for next week's candle. Hopefully it's going to close above the 569 level. 567. So if we have a candle here over 567, and we have another candle here that's twice the average volume of the previous 4 weeks, plus next week's candle should coincide with the end of the month. So you'd have a Stan Weinstein stage 2 confirmatory continuation breakout confirmed, and this candle could probably go up above and just confirm the continuation move towards your target. So you're already in uptrend on the monthly, guys. So that's already confirmed with this takeout pattern, and with that upper pattern, that bigger pattern giving us that 750 target. I think that I had a note that I had pointed out. And now it's just a question of refining the buying process. So if you're not in yet, yeah, you would have had a chance here on the pullback. And right now it's really healthy, guys. You could actually wait. You could actually enter now. But if we're 1 week close, might as well wait for next week just to get that extra confirmation that you'll get above that weekly defined resistance at 567. So close above 567 on the weekly next week. And if we get that big volume candle, like I just wrote, like above 1.5, 2 million, it's a buy. APVO, guys. Get ready to get in or get out. Ciao.